Hey traders, this is Shogun Chat 7. I train traders how to trade in harmony with the market. Today I want to do an in-depth analysis on the major index, the DXY, which is the dollar index, euro index, Australia index, the British pound, and the Japanese yen. If time permits me, I may be able to add the Canadian into it. But we'll start with the dollar index. So the reason this analysis is important is because here these indices are the basket of the currencies that we trade. Some of you might have seen me use the currency strength index, which is a derivative tool from the price that we get from the indices. However, looking at the basket itself in a technical way is of utmost importance because it gives you a new level of detail that you cannot see using an oscillator. Okay, those things are the oscillator that we use are powerful, but actually the price itself, if if you can read it, is stronger. Okay, so what I'm going to do, the first thing we're going to do, and this approach, if you use this approach, is gonna be very profitable for you in terms of analysis, is to identify the structural point. If the price is below the structure, you know the market is bearish in terms of in a general term, and if it is above the structure, the market is bullish in a general term. So you can then pair the bearish and the bullish pairs together. So with the US dollar, let's crack on with it. We want to identify the structure 0ABC. That is your structure there. Okay, as the structural point 106.126, and price has broken once, pull back twice. That tells us even after the correction, which has already started, we've seen 1 2. Okay, this correction have started in the US dollar, but our overriding direction is still to the downside. Okay, I'm using one of our tools here. This measures the highs and the low. Then we can then validate whether these highs and lows are valid or not using the other tools that I showed you the other day. But this one here, we just need to pick up the high and the lows of the market. This will always print the valid highs and the valid lows. Okay, so here is your structure. There is a momentum 1, momentum 3, followed by a pullback. The pullback has already started. We need to see when this pullback ended. We need to see green. That shows that the pullback is now valid. Then we can look for a selling opportunity. But right now, this is not the time to start to sell the dollar. The dollar index has already made a low with this move here. You can see that there. 1 2, using the 4-bar rule alone, this is a buying opportunity in terms of a corrective wave. All right, so the US dollar is negative, I'll say below structure, so we put negative. Okay, so the next one is the euro. Let me remove all these drawings. Look at that, look at that, beautiful. As a structure that failed, you can see how long it took them with this structure here. There's one that's actually a structure there. 1 2, the third one failed to make a lower low. Okay, then we have 0. This did not make a higher high. This is the structure here. That's the bullish structure there. We're trading above the bullish structure, so the euro is positive. The XY negative, EXY positive. So as you can see, the euro has given us a nice pullback structure momentum. That is a good one. 4-bar rule, you probably wait for this to finish. Maybe if we start to see a close above the high, and you know, there's always gaps in these datas for the indices. Okay, I think only TradeStation will give you a clean data. I've not seen all the other data provider. They don't usually give you the 24-hour date clean data. Only TradeStation will do that. But because we are not trading this live on the chart, we're just using those prices as an information tool. The trading will take place on the currencies, currency pairs themselves. So using this one is a good gauge because you're looking at euro on its own and you're looking at the dollar on its own. So we get it. So euro is positive, dollar is negative. That's basically what we want to derive from there. And we look at the Australia. There's no trend here. You can see that this is a daily. I don't know if I mentioned this is a daily chart, by the way. We had a trend down. We have a structure there, and we are still trading below that bearish structure, which is this one. As a structure, bearish structure. Then we have 0-1 bullish structure traded above it. This has been in a consolidation phase for a while now. I don't know what happened here with this huge short covering here. This is a reset basically in terms of the major trend, because the major structure is still there in terms in the Australian, and this will be helpful for people that are looking at a long-term positioning. If you are the one that like trading long-term position and you want to hold on to a position for 6 months, 1 year, this type of analysis is very important. But your entry level must be very superb. That is where we use the liquidity indicator for, because we want price to come to an area. For instance, if it's a downtrend, we want price to come to an area where the sellers are going to be uncomfortable. Okay, and those areas are the pullback that has already left the station and people thinking price is not going to come back there, but eventually they come back, take all the stop loss, and then decided to continue the move. And that is similar to this. Okay, I don't have all the tools here because that's not what we're doing. I'm just explaining that concept of a long-term entry, so that when the price starts to move, your risk is very small in terms of the positioning, and the gain is going to be huge if the price decide to move in the direction. So Australian dollar is a neutral market. AXY is positive or negative. The next one we're going to be doing is the Japanese yen. Okay, that was the bearish break that we had. Okay, price held it, made a move down, they broke it, they traded down. We are now back above it, and it's role reverse. You look at this since 2024. This thing has been playing above it, below it. It's a major move, that structure there. Where we are right now in terms of price action, we have one here, broken 1 and 2. Then this is a structure. 1 and 2. Okay, so let me remove. I'm not gonna delete that one. I'm just going to, because that is cool. This structure here, if you look at this has been traded once, followed by pullback, traded twice. If you've been following the dollar, the euro, when they trade the structure twice, that means price is coming nearing its end of that cycle. Okay, it doesn't mean the trend will change, but you are likely to have a major pullback or a major correction. So, but we trade what we see, not what we think, especially with these indices. The simple interpretation of this is this market is still bullish. The Japanese yen is still bullish. It is trading above the bullish structure. We have a momentum here, we have a momentum here, and you always think of it like this: the pullback is not a a change of trend. It's a discount. There are subtle things we can do here. I'm not going to go into that. Is this a trend changing pattern? If you want to know about that, watch some of my videos. I've already explained it. But those are the things we have to do, but we count the waves also. So with this, I'm just doing a general analysis. General means bullish or bearish, and this one we say bullish. Okay, so the JXY, it is positive in its outlook. Okay, why is it positive? It's because it is trading above the bullish structure. Okay, then the British pound, this one we trade this one very actively. You can see, and all those levels are very, look at how this 76%, look at how this one acted with the price. That pullback came on top of it, and you saw the rally. And that is why we do all this work, is because I said to someone the other day that trading is not a hobby. If you want to do it, you are looking for a hobby, you need to go and play table tennis, snooker, or something like that. Trading is a business. Okay, so this work, we set them up and we leave them, and they continue to play and act out during the year. Some of them, the lines are weekly charts. If I open some of my weekly templates, the lines has been drawn for the last 5 years, and they're still active because those are price points that will continue to act as a price magnet. Some of them will act as a rejecting price point, and they continue to help you in your decision making. Okay, price came below the bearish structure on this pound, and they traded above it, and that bearish structure is now doing the is role reversing basically. Okay, so what do we have here? 0 and 1. So this is the structure. Pound is trading above the structure. 1, pullback. 2. So it's doing the same thing that other pairs are doing as well. Here we don't have a trend changing pattern. So let's say high probability of continuation to the upside for the pound. Okay, because the last pullback did not give us a trend changing pattern. If this pullback, we need to observe this pullback that is going on. Is it going to be a deep one, or is it just going to be part of a new wave structure that is currently going on? We can see already from low to higher high, that tends to be very strong. We've seen a pullback that is valid. Okay, if I put a valid pullback 2 here, you will see this will print 1, 0, 1. That means it's valid. Then if we start to see a break above the previous high, that is a clue or a continuation move. Because if you go back on a smaller time frame, that on 15 minutes chart or something like that, that would be like a change of character break. All you have to do is wait for a pullback that did not trade below the pullback low, then you can look for a buying opportunity. These are basic stuff. Okay, so pound in terms of the ranking, BXY, is positive. Okay, so we've spent 15 minutes on this. I think that should be it. Let's rank them together. This is the reason I'm doing this, actually, the exercise. Okay, so what pairs, if you are looking at a longer term picture, because you can see this, some of these pairs are still going through what we call a pullback and correction, but eventually, and I'm putting that there is because the the purpose of doing this is not for you to go and open a pound dollar and start buying or start selling. That's not the point of what we're doing here. Okay, and I'm not going to say more than that. So in terms of pairing, US dollar is negative, euro is positive. So buy pairs, buy pairs, euro, US dollar, pound, US dollar. Those are buy pairs. Then we've got the neutral one, which is the Aussie. I'm not going to do anything with that. We've got the sell pair. We've got the sell pair as the US dollar JPY. Also, we can sell the Aussie yen because it is neutral, basically. AUDJPY. British, we've picked that up. JPY against the US dollar because the dollar is bona fide negative. The Aussie is neutral. So with the neutral one, we can sell it against the positive pairs, basically. So like you can say pound Aussie will be a buy pair, GBPAUD. Okay, and these are long-term projection. Long-term, we're looking at long-term trading ideas. Okay, so you probably want to be monitoring these pairs on the starting from the 4 hours daily and the weekly chart and analyzing the candle by candle, because that's what we meant to do. So I'll give you an example. Let's go into, so we've got, how many minutes have I got? I've got, let me do this for, let's do the pound dollar. Okay, now we're going into the pound US dollar, and this is what I do with this type of analysis. Okay, cable, remove drawings. Let's go to weekly chart. We can see this thing is trending. Okay, it's not a big trend, but it's trending. Series of higher highs, higher low, higher highs, higher low. We had a break here, which is a structure, and that is a good one because it's gonna give us a potential for a new move, which we saw already here. This move is strong, but how can we make sense of this move? Is this finish or not? We can do this. uh, Daily. So I've broken that wave down. Okay, so as a pullback, 0 1. So that's your structure. So we can call this in terms of wave count 0 ABC 1 1 followed by 2 3 4 and 5. Okay, so this thing is still going on, and this is what I meant by look for an opportunity to buy after the pullback. This pullback is valid, then this is where we are in terms of daily pullback. We now know we are trading the level 5, trading 5. 5 can give us, we haven't seen any extended move in these 3 waves, so this could give us an extension. So I've drawn the price at the low. Let's use the 1 hour for this, and as you can see, once we start to break above this pullback high, that is your, you don't have to trade it then. You can wait for a break and pull back, then you can buy it. And that's how you use this information to make a trading decision. I like giving this type of information away because that is what I do. I love sharing my ideas and knowledge. If you like what you see, give us a thumbs up.